Ladies and gentlemen, welcome to Bitcoin podcast number 5. Today, me and my co-host, Cael Sampson, will handle things. So we find ourselves, Cael, at a really interesting time. We're taping this, if that's still a word, recording this on Good Friday, appropriately rainy and dark day in Ames, Iowa. But we're at a time of tremendous global upheaval. We have a war in the Middle East. The Strait of Hormuz is closed. And risk on, risk off. What happens? But yeah, what we're going to do today, we'll quickly go through some short-term issues related to the convergence of agricultural commodity prices, Bitcoin prices, other prices in the world, going to medium term. And then Cael has a really interesting thesis to lay out for you for long term. What do you call that thesis, Cael?
I call it Crypto Don's Gambit. We're gonna gambit. He's making a gambit here. He's playing the chessboard to, I call it kneecapping the global financial order. So we'll see.
Yeah, so hold on, ladies and gentlemen, for that thesis. But let's start with the short term. So war in Iran, sitting with oil prices over $110. Markets are closed today. Yeah, yesterday, a big update on energy prices.
Yeah.
Recently, gold and silver prices actually have come off their highs by quite a bit. My first article I did for Long Look Cael, it talked about what are the odds of agricultural commodity prices beginning to catch some upward drift from energy prices. And at that point, there wasn't a whole bunch going on in energy prices.
Yeah, when was that?
2 months ago? 3 months ago? Yeah.
Yeah. It's about the same time I was asking for, a little shakeup in the Bitcoin market, and I didn't want it to be
The
to
downside.
this extent.
Yeah. Yeah. This darn future is hard to predict. Anyway, we've seen a little bit of uplift from energy prices into agricultural commodities, but in the U.S., we sit with fundamentals that aren't very bullish. Who knows what can happen going forward from a fundamental perspective? We're just entering planting season in the Northern Hemisphere. So, of course, weather affects things all the time. Yeah, we're getting some wonderful rains in central Iowa. But who knows how that continues to go on. My brother, who farms in south central Nebraska, texted me at 5:30 yesterday morning. And I've been going back and forth with him over the dry conditions there. And it's not just in Nebraska, but really continuing out to the west. Anyway, up until yesterday morning, he'd had 0 precipitation in the last 5 months. And that really stretches west all the way into Colorado. And he got an inch of rain yesterday, which is wonderful. So he can actually get some planting done. And it's irrigation country, but irrigation can only do so much. Anyway, he did get an inch. Meanwhile, we've gotten like 3 inches, but yeah who knows what the weather can do. Around the world, fertilizer prices, fuel prices, as we know here, have shot up. Hopefully, like my brother did, you got your fertilizer bought and that is paid for. If not, that's a problem. But for a lot of countries, they don't. And you just wonder about higher fertilizer prices, and they cut back on that. And does that ultimately affect crop yield? So many things that could happen. Could we see a step up in grain commodity prices? Yeah. Could we see even a good U.S. crop and that happen because of things that happen overseas? Yeah. But Cael, we probably could also draw a bearish scenario for agricultural commodity prices of an economic meltdown of some sort.
Yeah, I don't have experience with that. What I've been hearing, just plain and simple, is maybe corn will do very well because we're going to need some ethanol, because no one is going to want to buy it at these gas prices. But the big thing is, in a stagflation economy, very likely the really bad scenario, right, is if you have high energy prices could lead to an economy with stagflation given where we're at. Um, Great for nominal corn prices, soybean prices, what have you. But like you said, inputs are also going to go up. So yeah, you could be thinking great, but it's kind of all for nothing if your inputs go up as well.
Yeah, we tend in agriculture to root for inflation of the output prices that we have, which happens occasionally.
Mhm.
But inflationary episodes never end well in agriculture because, yeah, the end of it is input prices go up,
Yeah.
output prices go back down. Well, short term, Cael, on Bitcoin, as we record this, Bitcoin trading at 41. So, how do you think about Bitcoin prices here in the short term?
Well, it's been trading like a stable coin. That's what we like to say. It is still in that consolidation channel. It has been. Interestingly enough, we have now outweathered the 2022-2023 bear trough of negative funding through the bottom of that bear cycle. A lot of people disagree with me, the 4-year cycle people, Spencer Hilbert being one of them. And he's been telling me, I always like to get a different perspectives, but I just more and more I have to think, well, this thing's got to be almost over. We've got to be almost ready to shoot back up here. If our Bitcoin community keeps up with the Bitcoin fives, um, I talk about the Trump taco trade. Taco is Trump always chickens out. Well, I don't think he's necessarily chickening out, but he's using leverage and pressure to, you know, change up the markets and be able to make deals. That's what happened with his tariffs. That is what may be happening now with
Pressure,
Iran.
back off, pressure, back off, pressure, back off.
Right, right. And so he can get what he wants out of it. And then, well, eventually the markets end up taking back off. And, leading up to this conflict that just killed everything in the market, people, I don't think, realized how much momentum was really stacking up for the economy. A lot of macro tailwinds were just starting to accumulate and hadn't really kicked in yet. So I pulled up in the last Bitcoin 5 the surprise index. I think they called it. Uh, the business cycle is another one, and we'll go into that for the medium term. But short term things are looking really good. I think that's why a lot of people got caught on the wrong end of this trade, and now we're kind of weathering the storm. I think Bitcoin could go down to 53. We'll see what happens. There's two scenarios here. It's the taco, and then if things get really bad, the Don Gambit, and we'll get into that for a long-term view later.
Well, if we get into the 50s, definitely a buying opportunity, but in the 60s, this is really an excellent buying opportunity.
Oh, the Sharpe ratio chart. We're gonna get our editor, that's me, to pull this up on the screen. But right now is quite literally one of the craziest low risk, high reward generational accumulation and buying opportunities in Bitcoin's entire history, going back to 2015 and before. So if you felt bad for not getting in, like almost everyone in the world does, this is a great time to be looking at it and, get some conviction, position yourself, start learning.
So I've got Bitcoin accumulations in all kinds of different exchanges and stuff like that. And now on my node,
Mm-hmm.
but in one of my Coinbase accounts, basis on what I've got left there is 37,000 per Bitcoin. So it's like, well, okay. During the 2021-22 bear, I must have
Yeah,
been doing some buying.
yeah. You know what will make you feel even better? Michael Saylor's basis at strategy, I believe, is like 76K.
Well, I bought some certainly in the 120s and 100. I bought a pile at 115. So anyway, if I average across everything,
Mm-hmm.
probably there or even a little bit worse, Michael. Well,
And
medium term, skipping to that. Yeah, I mean, there's been really since the tariff tantrum, April, about a year ago. Yeah, it was sort of like, and you could speak to business leaders and, the Trump administration coming in is like, okay, are the animal spirits of investment, free enterprise coming back into play? And I think they were ready to, but it's sort of like, depending upon your industry, of course, and that sort of thing, especially manufacturing and some of that stuff, just people holding off. And
Yes.
then the ISM index and some of the other things that you track, Cael, yeah, again, we've sort of got this spigot that appears ready to turn on. Yeah. But now we have the uncertainty over energy prices, taking some money out of people's portfolios and equity. How do you think about more medium term outlook generally? How does that relate to how you think about Bitcoin?
So, I think this was the last Bitcoin 5 that we did as well. I focus entirely on medium term, and I always tell people it comes back to liquidity, the rate of change of global liquidity, and then the business cycle. And there's a great chart shown. We'll put it on screen here again. It's the power law versus the business cycle. So Bitcoin will always grind and fair value wise go up that power law. I believe, I know you believe it. Um, but then how do we explain these troughs in a bear market, uh, ex just super expansive, explosive moves upward to oversold valuation or overbought valuations? That would be the business cycle. And so I look to that right now. I have some leading indicators. Taiwan exports, Korean exports is what I used yesterday. And that can kind of tell us where we think that the ISM is going to be able to go. The last time we were in expansion territory was back in 2021 when we got those high highs of 68K, which was hugely overbought for back then. And we haven't had expansion for 5 years now. This has been the longest business cycle that we've had to wait on. And just now, it's finally back into expansion territory over 50 on the ISM PMI chart, but everyone's like ready to throw the towel in. I think right before something really great can happen. I understand it given, the fear going on in the market, but you have to zoom out sometimes.
Yeah, if we look at our power law chart, the power law trend right now is about 133,000.
For
So
fair value?
yeah, so we are below it. If we go to, power law trend around 170,000 by year end.
Right. Right. So, and
Could we still be trading below it at year end? Yeah, of course.
the correlation for the business cycle, the ISM and global liquidity, they're supposed to be correlated and follow like this. And right now, this is Bitcoin down here. Global liquidity and the ISM are up here. That's a huge gap. The market loves to fill gaps, as we know, and it's going to happen eventually. It's just a matter as soon as whatever short-term conflict, whatever fear in the market gets resolved, all that gap closes, and then all the tailwinds macro-wise kick in. That would be the taco trade.
And
Yeah,
it's been interesting. The gold investors have had, unless you're in really late, pretty good time and make
yeah,
fun of Bitcoin stuff. But then, through all this turmoil, safety has been anyway. Bitcoin has held its own while we backed off more than $500 an ounce on gold.
yeah. I think, and I'm not sure exactly what happened. I mean, you could make the argument there was some insider knowledge or something, and that's why Bitcoin fell before everything else. But yeah, there's almost no downside left to go. Like I said, 53, 54 in like a really bad scenario. That's only a 10% dip from where we're at. That's nothing for Bitcoin, or
Yeah.
20% dip. It's nothing.
Probably the other thing to finish off the medium term issues, Cael, we've been talking the last day, and we got some good content last night from Peruvian Bull, who watches international metals and international issues, and just these energy prices are putting significant pressure on many other countries. Egypt, that up until this conflict appeared to be in as good of shape as they've been in a while, are now like essentially having brownouts and rationing electricity
Mm.
and having all kinds of issues. Korea doing all kinds of things with fuel prices. Turkey is having to sell gold to be able to make some international transactions. Some of those countries have had their monthly fuel bills double in a very short period of time. So yeah, I mean, the proverbial straw that breaks the camel's back from a sovereign nation perspective and fiscal policies that are not sustainable, one never knows.
Yeah, that's the unfortunate part. We can talk economics all day, and it's a lot of arbitrary ideas that are disassociated from the reality that we're all living on this earth. Those people in those countries are probably going through it right now. And like, who did we have on the podcast? I think it was Adam, who talked about our energy capacity is what is highly correlated to people prospering and living good lives. So these chessboard plays by politicians and stuff around the world affect that. That's one of the many reasons that people are into Bitcoin. I think a lot of people have this misconception that Bitcoin people are all just crypto bros that care about putting more money in their own pockets and cool tech stuff. But a lot of people are in this business because they care about people.
Definitely. All right, without further ado, let's break into our long-term segment here. And Cael, let's break open for our audience the Crypto Don's Gambit.
Okay, let's do it. I'm going to share my screen here. Also share audio. Sure, why not? And I have a quick presentation I wrapped up just because if I start, getting leeway from you, Kevin, and everyone else to do my conspiracy talk, I can get towards a schizophrenic rant pretty quickly.
We'll try to keep you in bounds.
Yeah, so I see two paths, a fork in the road, right? And one of them
The
is the
old
taco
Yogi
trade.
Berra saying is, when you come to a fork in the road, take it.
Yeah. We have the Trump taco trade. That's the nothing ever happens trade. Uh, you know, conflict will resolve. Everyone's fears will be displaced. Uh, Goldman Sachs forecasts for oil and the S&P 500 are realized and everything goes on. Stocks go up as normal. What have you. This is a doomsday scenario. Crypto Don's Gambit. And I guess me putting 1,000 different puzzle pieces together in my head, making a case for um, why this strategy could be incentivized for the US administration to take on.
Kneecapping the global order.
Yeah, little mafia-esque. Let's get into the core thesis. A controlled demolition of TradFi. Strategy. Things are going to get progressively worse by design. The US administration is purposely kneecapping the global financial system in all other countries. We've kind of already touched this. This is what's going on in Egypt, all these other countries. The US will inevitably be the last man standing in this kind of a financial Armageddon, right?
Yeah, I mean, an energy crisis of the nature we have got right now, you don't have to go back very far in history, at least from my perspective, Cael, maybe a little bit different from you, but you go back to the pre-shale revolution in the United States, and it's a serious problem for us. And maybe, it can be a problem, but from an energy perspective, at least, we're
Yeah.
suppliers, not buyers.
Yeah. Can you make an analogy for me and the audience because I'm not familiar with?
Yeah, so if you go back to 1972, the OPEC oil embargo, and at the same time, we'd run off the gold standard. So you had this confluence of different factors. But you had gas lines in the United States. You had certain states where if you had an odd license plate, you could fill up your car on like Tuesday, Friday, Saturday. If you had even license plates other days, we essentially began rationing because we depended
Yes.
upon oil and oil supplies coming essentially from the Middle East. Today, we're net exporters of oil. We have our own natural gas. We have liquefied natural gas export facilities. It's completely different. So the shale revolution, our entrepreneurs and wildcatters having figured out, the late 90s through, let's say, 2007, when you really started to see it around the financial crisis, how to drill horizontally and access in shale formations, oil that we could not, and natural gas that we could not access before. So the Permian Basin in Texas became a thing, a bigger thing. The Bakken formation in the North Dakota became a thing. Anyway, all of a sudden it's like the peak petroleum production theories, throw them out. United States is back in the game.
Okay, no, that's perfect. Thank you. A little history lesson. Okay, and so my end game, though, to this theory is the U.S. in the end positions itself to be the last one standing, enabling a rapid and exclusive swap from the broken traditional financial system to a new financial paradigm based entirely on Bitcoin, stablecoins, tokenization, and the blockchain. I do research on this every day. I can tell you full-heartedly, under the surface of all of the other headlines they're trying to grab with your attention with in the news, people are tirelessly working on this from every sector, from the administration to Congress legislation to agencies, the CFTC, the SEC, the Office of the Comptroller of the Currency, the DTCC, banks. It goes as deep as it goes and across horizontally all the way through. So the setup, this is exactly what I'm talking about. Political will. The Trump administration, I think, has really telegraphed this from the start. You have to go back and think about who was backing Trump in this latest campaign. Kevin, tell your story about Anderson Horowitz
Yeah,
endorsing
so
Trump.
it's August 2024 or thereabouts, maybe July. West Ames, listening to the Ben and Mark podcast. So Ben Horowitz, Mark Andreessen, of Andreessen Horowitz fame. And they essentially endorsed Donald Trump for president of the United States. So I picked myself off the street because these are guys who support Democratic candidates. Like Andreessen is personal friends of like Bill and Hillary Clinton and Barack Obama and Al Gore and back them all. But they have a big crypto fund. They're backers of companies like Coinbase and many others. And the Biden administration was essentially debanking, not Coinbase, although they caused enough trouble, but they were debanking. Well, they were debanking startups like Bitcoin.
Yes, they were.
Which makes it kind of impossible to have a business. And so they, endorsed him. But, Donald Trump candidate spoke in May or June 2024 to the Bitcoin conference in Nashville and got behind it. But he and his family experienced all the same stuff that the portfolio companies for Andreessen Horowitz were. They were debanked, like banks they had done billions of dollars of business with over decades, debanked them. And it's like, wow.
This was post January 6th, right?
Yeah.
So, I mean, he's got Andreessen Horowitz, but that's just the very beginning. He states from the start, big speeches. We're going to be a Bitcoin superpower. We're going to be the capital of crypto in the world. We're going to use AI. And these are my top two priorities throughout my entire run of this presidential election. And he's carrying through.
Almost
People
every
don't see
single
it.
cabinet member is a investor.
The new Fed chair that he is putting in office, Kevin Warsh, is a confirmed pro-Bitcoiner. David Sachs is his crypto czar. We have Congress is moving the Clarity Act through. They're getting market structure. The SEC and the CFTC just did a joint classification of a bunch of different cryptocurrencies, and they're providing clarity before legislation actually comes through. So you have multiple branches working on that. As I said, you had Sam Altman, you have Brian Armstrong, you have Sergey Nazarov, like everyone that's a who's who in AI and crypto are the ones that he had at his banquets and everything.
Yeah, and it's hard, I think, for the average American at least to detect at this point. But the foundations of, yeah, I think, Cael, what you referred to as TradFi, traditional finance, are shaky.
And we'll get into that more. It's really not looking good. It's looking 2008-esque here, and we'll have some credibility for that. But let's get back to institutional adoption right now, and that's the banks, which are doing the same thing as our legislative branches are doing for Bitcoin. Congress's almost number one priority has been crypto stuff. Now, in the private sector, the banks have been doing the same thing. BlackRock, their number one performing product is IBIT, their Bitcoin ETF. And what are they doing with that? Well, they're holding Bitcoin on there for these other companies, Citibank, JP Morgan, Morgan Stanley, to be able to sell Bitcoin credit products based on IBIT's balance sheet of Bitcoin. And Michael Saylor's strategy has been hoarding Bitcoin since 2020, accumulating more and more. They will likely be the biggest bank in the world when all banks and cryptocurrency companies merge to form a new industry called the digital assets industry. It's where we're moving. Everyone's focused on that. And then I have the motive, the mens rea, as I call it, because this is, uh, somewhat criminal. Maybe not in the law, but ethically, I think many believe American dominance is fading. Europe, Asia, Latin America, they're all kind of catching up, and we've seen technologically their economies, um, drone swarms, just guerrilla tactics, being able to shut down, aircraft carriers and big things that America has invested in a long time. That's kind of standard with the fall of an empire throughout history, and that's what we're seeing. Would you agree with that?
Yeah, we definitely see the world wanting to find ways to at least hedge American dominance, whether that be financially or whatever. And in some ways, even as an American, it's understandable. Like, took Russian money
Yeah.
or froze it at least. Yeah, do you want to be a part of that financial system? And yeah, it's been part of the reason for central banks acquiring gold. Well, probably one of a few different reasons for them to acquire.
Yeah, I think,
So you
and
look at that
maybe,
on the one hand, but on the other hand, it's like, I mean, I remember 10 years ago, people were like, well, by the time we get to 2026, like China's going to be a bigger percentage of the world economy and the US is going to be less.
yeah,
It hasn't changed substantially. The US is a bigger share than Europe, growing faster than them. And now we're certainly growing faster than even the dishonest numbers that China puts out. So there's
yeah,
just anyway, there's the government, for better or for worse, but then there's the American people and what we do. And we've still got hustle and we're still builders. And that's
true.
not going to change.
Yeah. But this is why you have BRICS and, like you said, possibly why, all these other countries have been selling off their US treasuries to buy gold. And, gold's come back. Perhaps now they're using some of that gold to fund defense spending or just hedge against the uncertainty of geopolitical conflict.
And now they're using it to buy oil.
And that's kind of exactly what we're going into. The global realization. That's exactly what we're talking about. Rivals like China catching on to the US. And I'm not sure as far as is this happening, intelligence exists for a reason. Is there an intelligence apparatus that can key other countries in on this strategy? Why would China not like Bitcoin and start selling off all their US treasuries? Maybe the US scraps it, right? And a stablecoin, we know the stablecoin system's coming. I'm telling you it's coming. Um, but that gets us to the golden lifeboat. In response, foreign nations have started to aggressively dump the US treasuries, using the proceeds to stockpile. Gold is a safe haven asset for impending catastrophic scenario. Uh, then the incentive for the US to carry out this strategy, right? It makes total sense why we would have gone at Venezuela first, because now we have control over a $17 trillion oil reserve in Venezuela that hedges us against our own attack. By the way, people that play these giant chess gambits love synergies, and we get to pick up $60 billion worth of Bitcoin for free for our U.S. strategic Bitcoin reserve that we will likely end up backing the U.S. dollar with.
And that oil quits flowing to people that are not hostile to us, pretty close to it.
Right, right. You close the Strait of Hormuz, you create the crisis. One, uh, you control the energy now even more so. And two, that's really the first step. We talk about high energy prices leading to stagflation. That is the first step to crippling the global financial system. Now this is where we get into it. Do you have any other comments before we jump into 2008?
No, I was just going to say there was a report yesterday about, and I missed it prior to this, but over the last month, Russia has really put the screws down on trying to prevent gold from leaving the country, because
Okay.
it is.
Yeah.
And so you just see, anyway, there's been lots of debate. Do higher oil prices help Russia? But Ukraine has done a pretty good job preventing them from being able to export much. And yeah, is there a larger chess game here that even has Putin as king?
Yeah, that is interesting. And I don't want to go deep into it, but Putin's clearly trying to get out of it. And this might be hearsay, but that deal that he was supposedly offering to Trump in the US, did you look any more into that? If
I did
that's
not.
real?
I did not.
Okay. We'll leave that be then. Um, so this is the domestic bleed section, and another really, really, really unfortunate scenario that we have to come to terms with if this is a strategy playing out, and that is the traditional financial system is shaking. We're seeing 2008-esque stuff. Well, what's going to happen? Just as they always have, the people on Wall Street know this is going on, and they're going to extract as much value as they possibly can out of a financial collapse while leading, you know, mom and pop and average Joe holding the bags, watching their retirement savings go down 80, 90% again.
Heads I win, tail you lose.
Yeah, it's the new 2008. So back then, back home, the private credit market is bleeding. I really think that there's a historical piece. This man that will be known as the new Michael Burry. His name is Nick Nemeth, and he's just an average Joe that put out this awesome article called, I think it's called A Note to Secretary Besant. Totally, it's an expose on private credit and private equity. What's going on right now? Goldman Sachs and private credit lenders all making these instruments, selling private credit to private equity funds, private equity institutions, and they are products that were made, with cracks in them, and they are, inflating Wall Street. They're inflating a fake economy, and then what they do all of a sudden is they've been given the go-ahead now to reverse engineer a product that actively bets against that broken product they made, bets on it breaking, bets on the dominoes falling, and they profit from it.
Make money selling them and then make money when the value of those crashes.
And that's exactly what happened with mortgage-backed securities, is it not?
It is, or if they were on the wrong side of it, they got bailed out.
Yeah, exactly.
Most.
So this would be the financial crisis to rule them all, because instead of a bailout, uh, the bad guys make the profit that they're going to make, and then they just take out the traditional system, wipe the whiteboard clean, just like the rest of the world. But then the U.S. is the only one uniquely positioned to put the new and better thing in place, which is a Bitcoin blockchain stablecoin financial system. And that's fantastic. It's the hardest, the best, the freest money ever made, and it works for everyone. The only catch is, well, you're not going to have any money left to be on it, if they have their way. And if you do, well, they're going to be the first one standing in line saying, hey there, you know, self-custody, it's really dangerous. And we don't think that you're smart enough to be able to take care of your own money. So what we're going to do here is we'll hold it for you. Okay.
Well, before I wrote the white paper on Bitcoin Kale,
Yeah.
yeah, I'm a history nerd and I've been around for a long time. I did not fully understand Executive Order 6102 at the dawn of the Roosevelt administration in 1933 that they
Hmm.
confiscated gold. Yeah, and if you had it in a bank, it was gone. And every post office in America was a sign that said by the end of April 1933, you are to turn in whatever private gold holdings you have.
Yeah, we should we should make everyone sit down and watch a documentary about that and hear first person witness stories about that time because, that could happen again and it could happen with gold and Bitcoin. And that's your reason for self-custody. That's your reason for a Bitcoin node right there, full sovereignty, and no one is going to be able to tell you, we're taking this unless, violence gets involved, but that's a separate thing. But that's the Trojan horse I talked about. I got a little ahead of myself because I get pretty, I get pretty emotional and about this kind of thing. So let's just get to the conclusion. The bottom line, this is totally speculative, and I connected the dots in my head. Admittedly, I probably have overactive pattern recognition, but this is a strategy that could happen. And, I think if you think there's two possibilities here, a taco trade or full financial collapse on purpose, it's incentivized. Well, what's going to happen? It's probably a little bit of both. And unfortunately, I do think that this isn't necessarily going to come out right away with the geopolitical conflict right now. As we mentioned before, uh, the people in charge of the economy are also very smart. And I don't think they'd want to waste a business cycle that's expanding for the first time, and that's set to peak around mid 2027. SpaceX IPOs, OpenAI IPO, Palmer Luckey's company, kind of all set to IPO around 2027, 2028, right? Uh, Also, some of the smartest people in the world with uh, a lot of the best in the business working for them, they know when it's going to be an optimal time for overvaluation and raking in their own cash. So we probably have, at the very least, until then, for something scary, a scary scenario. But 2028, 2029, who knows? So maybe these two theories converge somehow. And I can't predict the future, but this is what I see.
Well, nobody can, Kale, but the point of this sort of exercise and why I appreciate you taking a shot at building scenarios is that is what it takes to react better when circumstances do express themselves. And just trying to make more informed moves given the information that we've got at this particular point in time and being able to adjust faster, being able to adjust better and make better decisions. And, that's been the interesting thing. I used to have a company where I every day thought about what grain prices were going to do. And of course, was wrong a lot, but at least had a perspective. Now I'm back in the boat of just having some of my own grain to market and the humbling experience of how terrible I am. I've gotten better when I've begun to look at grain prices through the lens of Bitcoin. The first truly global free market 24/7. Today financial markets are closed on Good Friday, which is fine. Bitcoin trades at this moment, 66,901. So up $100 from when we started.
Yeah. All right. Well, that's my piece on the crypto Don's Gambit.
All right. Until next time, thank you, Bitcoin community.
Thank you guys.